We are back at it again here with another video with the Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index, continuing to fight to hold support here and breaking through key support levels in today's volatility. And our SPY buy at 1:35 p.m. sent out a bear indicator, and from that moment forward, outflows crossed the midpoint to the downside. Pure weakness there on 42 vision, and put options went up 300% plus within an hour, guys. If you guys want to receive this clarity and edge over the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicators, getting connected over to our bots, and becoming part of a growing community of investors, all looking to learn and grow together by receiving this clarity and edge over the charts and using these resources to maximize in either direction, whether stocks are going up or going down. So here we are with the SPY, the S&P 500 index, fighting to hold support. And in today's video, we're going to break down the key levels I would watch. But before we do, I want to share with you guys the home run opportunity that was mentioned this morning over at the Discord. So the home run today was spectacular and beyond expectations. And if you guys want to know about these stocks early on and receive this clarity and edge over the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicators, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together. So the home run today was from our Netflix spot. Our Netflix spot at 2 p.m. sent out a bear indicator, and from that moment forward, outflows crossed the midpoint to the downside. Pure weakness down on 42 vision, and put options went up 150% plus within an hour, guys. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicators, getting connected over to our bots. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump to these charts. Here we are with the SPY stock, the S&P 500 index, doing a full transition from white with red borders to multiple bright green bars, and in today's volatility from bright green back down to white with red borders. If this is your first time coming across the channel, this is 42 vision, which allows us to see the dips from the rips to the dips, and where the strength and weakness lies within the charts. And we also use our bull and bear indicators and inflow versus outflow as an extra layer of confirmation, which I'm going to pull up here and you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together by receiving this clarity and edge over the charts and using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are with the SPY stock, the S&P 500 index, under a bear indicator since the 522.87 level, and it lasted all the way down towards 513 so far, and it is still dominating here on the 30-minute chart. Now, this is not to be a surprise. We keep on rejecting near all-time highs, as we could see it here. Every time it tries to get above 523, 524, it has rejected sharply. Now, this is the sharpest drop that we've seen in months and even years, I believe, in such a quick move in one single day. Now, if you've been keeping up with the news, this happened because the Fed made some hawkish comments. Now, what's going on with the data has been hawkish since the beginning of the year, yet the market keeps on going up, right? You could see those runs here throughout February, all the way since January, where things were consolidating and fighting between 470 and 460, and quickly it just continued to push up higher. Now, if we were to push downwards or have some type of weakness here in these charts, since we've had a huge run, right? We've been under a bull indicator since the 418 level since November of 2023. That's nearly near the bottom, the recent bottom that we saw. And if we were to have some type of correction, which is not to be a surprise. I mean, we're here up around 52-week highs, all-time highs, and keep on rejecting it. Well, that could be a setup for the next bull run, right? We have no bear indicator just yet. This bull indicator on the 1-day chart is still strong. On the 4-hour chart, a bear indicator in the volatility has popped up since yesterday. So as we were pushing back up, it was no surprise to see things reject here based off the 4-hour, right? If I pull it up again, you could see that bear indicator there since 421, and quickly it has came back down. To complete the transition from bright green bars, we need to see widespread borders. It hasn't hit it yet, and the last several times there's been pullbacks, it hasn't even hit widespread borders before it finds support. So it's not necessarily guaranteed to happen, but it is something I would not ignore and watch out for here in the bigger picture. Now on the 2-hour, it did hit widespread borders again, and the most recent time it did that was on Tuesday, right at that 517, 516 level before coming back up and doing a full transition. So we have the 2-hour, we have the 1-hour, and we also have the 30-minute and 15-minute in widespread borders. Could it find support here? Could this have been an overreaction? Totally possible, but we also want to keep in mind the data and what the Fed is saying, because the market has ran as much as it has. Okay, if you've been tracking it, whether you're new or you've been in the market for some time, because of the anticipation of rate cuts, right? And they're expecting 3 or more sometime by the second half of this year. Now, Fed members have came out and stated maybe we don't need any, the way things are looking and how inflation is looking, right? And something a lot of people are not talking about as well is the unemployment rate spiking up a little bit. Not huge, but it has moved up from like 3.4, 3.5, back up to 3.6 or something a little bit above that. So that is something to not overlook as it gets closer to 4%, if it even does. But also we have interest rates in a possibility of 2 rate cuts or less or none this year, and all of a sudden the market's going to have to start pricing that in. With how fast it priced in the excitement and the euphoria upwards. The same way it was going upwards, it's going to have to price in now that possible weakness, or how they say higher for longer rates, which the market was actually completely ignoring. And I mean, we've gone up pretty fast since January up to this point, from the 470 area to 520. That's nearly from where we're at right now. If we were to go back down to that area, 10%. That's a correction, right? Corrections can be anywhere from 10 to 20%. So there's room here for a possible correction. Now, is it guaranteed that a correction will happen? No, right? It could quickly find support, and this could just be an overreaction. Any pull down towards 510, 505, 500, and then go ahead and get a run back up like it did here, back in that 509 area and also 505 area before running up to these new all-time highs. So in these pullbacks, this is my personal opinion and perspective, this is not where investing stops. This is not where it actually ends. This is where it begins. This is how the next bull run starts. On these corrections, on these pullbacks, and these are the opportunities to catch things on the way back up. If you're not aware of 42 Vision, one of the greatest things about 42 Vision is it allows you, if you're trying to swing trade or even day trade, depending on what your strategy is, with the widespread borders, to start setting yourself up. At least that's how I use it. Set myself up to go ahead and dollar cost average into a position trying to catch bottoms, right? Because once these widespread borders start to appear, this is the bottom range. I try to buy days out, and there you see it, right? The reversal. And now we just hit widespread borders again here on the 1 hour. I look for multiple time frames that hit it, and then 30-minute, and set myself up there as well. You could see it here again, trying to set up that 520 area. Lasted for 3 days before running up to 525, and it was an accumulation zone, right? If we go ahead and zoom out and look at it back down here, same thing, right? Didn't touch any of this. Hits widespread borders anywhere from 512 to 508. Try to dollar cost average, get the best price that I can, and the next day it was already back up to 515, up from where it even opened, right? Which was around 512. And just a few days later, if you buy weeks out and you buy time, well, then you also had just a few days later a huge run of nearly $10 to $15. So those are the opportunities, and you see it here again, right? Why we're Fed borders. This was an accumulation day. The next day was already up, and 2 days later, easy opportunity of nearly almost $10, right? $8 to $10. And in the options chain, that could be anywhere from what I've seen, if you want to comment down below and correct me, that could be anywhere from 30 to 50% on the low end, and on the high end, 50 to 100% plus, right? Swing trading and buying time. So that's what 42 Vision's all about. And the bull and bear indicators are there to add extra layers of confirmation. And we use the inflow versus outflow as well to see the strength and weakness within these price movements. So let me break down real quick the key levels I would watch. I'm not even going to pull up the inflow versus outflows. This video is a little different. I was breaking down information of what's going on with why we fell so fast, and how these drops or possible corrections are healthy, right? Because they set us up for the next bull runs, right? Because if we zoom out and look at the history of the chart, the last bull run was set up with a healthy pullback here, right? In October of 2023, and from August to October, it fell, and look how fast things went up, nearly $110, right? And then back here in 2022, it lasted almost all year, and it dropped from 450 down to 350, and it went up for the next year and a half almost. So it's all about perspective. In the bigger picture, as they like to say, the market always goes up, and if you really look at it, it does. But in the shorter time frames, charts look like they're going to collapse and never come back up, but they always find support, right? So we are right now near all-time highs, 52-week highs, so that's something to not ignore, and any pullback should not be any surprise, especially up here. A pullback somewhere down here in the middle of 470 and then down towards 430, 410 again, yeah, that could be shocking. But anything from up here towards 500 or slightly below it, that should not be a shock, and especially if the Fed starts coming out and stating their new perspectives with what the data is showing, because they've always said we're going to take it data by data, and the data that's been coming out for the last several months has not been supporting their idea that they have fought inflation and we're getting towards that 2%, as they always refer to as that benchmark, and that we're not that close to it as they thought, and we're pulling away from it. Could we get there? I'm sure we can. And a lot of people are comparing this to 08, the dot-com bubble with AI and stuff. We're in a very different economy right now, and it's pretty strong, even though it may not seem like it. This is probably some of the strongest levels of our economy overall, coming from 2016 to this point. And it has been destroyed with how strong it is by inflation. Because if inflation didn't exist, with how strong the economy overall is, it would be a strong economy. It would be a healthy one. But inflation is eating away all of the rapid advancement or progression that the economy has had. And because it's advancing so fast and progressing so fast, inflation is moving with it. I mean, they go hand in hand. It's kind of hard to find a happy medium, and that's what the Fed's job is supposed to be. So I hope that they can they can go ahead. I'm over here running over my tongue and what I'm trying to say, because some people could agree with me or disagree with me on this, and I look forward to seeing your thoughts down below. I'm kind of rambling and expressing myself rather than breaking charts here, but I personally believe that hopefully the Fed can figure this all out. They've been doing pretty well to this point, but it's not going to be cool if something breaks. And then it turns out to be that they've been playing the show, that they know what they're doing and that what they were going to do, and all of a sudden we get surprises. Or maybe they're just waiting for something to break, and that's part of their strategy to then quickly start cutting rates. Who knows? And that's another excuse for them to quickly start to cut rates. Until then, they're just going to keep trying to play it, data by data, as they say. So what are the levels I would be watching? I'm not even going to pull up the inflow versus outflows. We're going to break that down in more detail tomorrow, because this video went a little longer than expected. But the first thing is support, 512. If 512 gets broken through, 510 is crucial. And then to the upside, 517 is a critical resistance. That's where things held support here back on Tuesday and ran up. And if that gets broken through, then I'll be watching the 520 and then the levels above that we've broken down in previous videos. Tomorrow, I'll go more into the charts. Today, it was just a little bit of my opinions, my perspective. I hope some of you guys agree with me. And those of you that disagree, I would love to see your opinions down below. We can learn so much from each other. And we'll break down the charts in more details tomorrow. As always, guys, thank you guys so much for watching. There's opportunities every single day, especially with this type of volatility. And let's make some money.